Let's get started then with our discussion on assessing and evaluating the structural pension fund reforms. We'll start with Maria Victoria Fascio. She's a senior specialist in the labor market division of the IDB. She works on operational as well as knowledge programs. She joined the IDB in 2009 to work on the knowledge agenda on informality, productivity, and social security reform. She's in the vice presidency of sectors and knowledge. And since 2011, she's worked in the labor markets division. Before working for the bank, she worked for the World Bank and focused on poverty, education, and labor market issues in the research department of the International Monetary Fund, working on microeconomic issues and international finance. And she also worked as a research at the Center for Distributive Labor and Social Studies. Her main areas of interest focus on how to contribute to improve the skills of the young, to help them enter the labor market and thus improve their career paths, and how to design social security policies to improve the quality of jobs. She has an undergraduate degree and an MA, master's degree in economics from the Universidad of La Plata. Thank you very much. Good morning, Diego. Good morning, everyone. It's a pleasure to be a part of this panel together with you to share ideas about the performance of the Dominican pension fund system at 20 years after its reform.
I'm going to focus my presentation on how the system is funded, how it is linked to the labor market in the Dominican Republic, which has a high degree of informal work, as we all know. And just to also share some context around the major milestones for this system, let's just take a quick trip back to the beginning and see exactly what the milestones have been since the beginning. As David was mentioning, the fact that the system was created alone was a major step forward for well-being in the Dominican Republic. In 2001, prior to that, there was no social security system for all workers. There was a general system for some citizen payouts, but there was no real way to ensure those working in the private sector would get a pension. Anything having to do with employment was led by the Ministry of Labor, and there were a few different insurance schemes for workers. In 2001, there was the adoption of the Social Security Act. It had some pretty big ambitions, including Social Security coverage for everyone in the country. One of the goals was to have in 15 years 80% coverage within the system, and the average replacement rate was targeted at 40%. The system was created as a fully funded system and for the contributory component with solidarity pensions that would be funded by taxes. That being said, in the implementation for the entire system that was designed in 2001, this is what followed the passing of the law, but it didn't quite go as planned. It's yet to be fully implemented. And in this mapping here, we saw that the only plan that had been fully implemented was the contributory plan. That was only for salaried workers starting in 2003. And then moving forward to 2007, there was the subsidized plan. And we are going to get into more details regarding the three different plans created by the law. The subsidized plan is for self-employed workers or those who are earning below minimum wage, but it was created for mainly healthcare services and those benefits and not really for pensions. Between 2013 and 2020, this was 10 years after the system was created, there were talks and there were reforms that started to be discussed. As a matter of fact, the IDB provided some technical support, and Novastra as well, under the leadership of Diego, made a number of contributions to the thinking at the time, and this helped design the reform. Now, the reform ultimately was not a comprehensive one, but there was still discussion around a new reform of the process. And with the current administration, there are renewed talks to discuss a comprehensive overhaul of the system 20 years later. Now, there have been some really positive contributions from the social security system for the country. As I mentioned before, prior to 2001, there was no retirement system like this for all workers. So this is a major step forward in terms of taking stock 20 years later. And this has also led to savings for the country, which is another positive contribution to the macroeconomic situation in the country. And this is highlighted by what some of the other speakers have already mentioned in terms of what this can do for a country. But now, if we move on to the challenges, we see that since it was implemented, some still remain. As David mentioned, 20 years later is a good time to rethink the path forward, particularly now when things are very different, both in the country and in the world. We are undergoing a crisis and in a recovery period following the pandemic. And so it is time to take stock of where things stand now and also what the ideal path forward would be. If we think about four pillars, we're looking at coverage and equity, efficiency, sustainability, and institutional framework. What we can say is that if we start with the first one, this is a coverage and equity. This is still a work in progress. This is because currently there have not been any contribution mechanisms launched as provided for in the law. There is no coverage for self-employed workers, which could account for as much as 40% of all workers. Also, as I mentioned before, the subsidized plan exists for healthcare, but not for pensions. This can create distortions, as we're going to see a little bit further in the presentation. There have also been disruptions that have come from a very fragmented design based on employment status and financing plans, which essentially creates different contribution requirements based on employment status, and that causes disruptions in the labor market. There are also other issues that have to do with labor laws and the fact that there was no real reconciling of all of the issues having to do with what was already in the law and what this mechanism wanted to achieve. There is one issue that is currently being discussed in terms of labor reform in the country and a number of other issues that are still pending. Now, sustainability, we know that there's some inadequacy still happening. There are low replacement rates, and there is also very little value given to this system. There is not a lot of information and awareness in the country around what this is and how it works. This creates a lot of debate. This was a system that was designed with a more formal labor market in mind, whereas the country has a high degree of informality. In terms of the institutional framework, I think there's a lot more yet to be done. This is a system that is still very much fragmented, and there's a need to enhance monitoring and additional development of the system. In the law, there were three funding plans. And I'm going to focus on this because it is closely linked to how the labor market has grown over time and how it's been developed. And also, we'll focus on how the labor market has had an impact on the design here. There were three contribution schemes according to employment status and also according to the income level and the wages. The first is the contributory plan. It was developed to include only salaried workers. In this case here, when it comes to the contributory plan, 70% of contributions come from what comes straight from companies, and the other 30% comes from salaried workers. There's this second plan here that was subsidized, and it was meant to go to self-employed workers who earned a certain amount. This had a number of different components involved in how to break down, for example, the 70-30 ratio for employers or employees contributing to it. And that led to some discussion and a few challenges. There's also the subsidized plan that was only implemented for the healthcare sector. And it was only in October of this year that there was an announcement that the first solidarity pension payouts were going to begin to be made. The contributory plan for salaried workers was the only one that was fully fleshed out, but coverage was fairly low. As we're going to see, there is a lot of evasion. The wages that hit the threshold for contribution are very low, and there's a low replacement rate. And essentially, what I wanted to highlight here with this kind of design was how there was a different classification for different kinds of workers. And the fact that self-employed workers weren't fully included in what was ultimately adopted means that there were a lot of people that were left out, particularly given their share of all workers. We've seen that in terms of coverage, the growth has pretty much plateaued over the last few years. Growth has been at very low rates. And during the pandemic, as a matter of fact, there has been a sharp drop. There's a major challenge in the country in terms of actually looking at informal job creation. It is a country that has seen one of the highest growth rates in the entire region, yet no formal jobs are being created accordingly. We also know that we have workers who pivot back and forth between formal and informal employment. That also goes for the amount of unemployment that there is, and that creates some gaps in contributions. Also, this dual retirement and pension systems, all of this ultimately depends on employment status for workers who go through different phases. Now, in 2003, we see the implementation of the contributory plan. As I mentioned, coverage did increase in the beginning, but then it sort of stayed at about 30 to 40% of everyone in the workforce. Here we can see that sharp drop. This was about 500,000 contributors who dropped off during the crisis. However, the government was able to have an emergency fund kick in. One of the lessons learned here would be to ensure that in the future there is an employment insurance plan to help those struggling. It is very difficult, for example, when you work as a self-employed worker to figure this out when you're not in the system. Now, something else that leads to disruptions has to do with the subsidized healthcare plan that was adopted, as well as what the other plans represented. This means that 66% of those who have health insurance, and these are the subsidized plans, and that can create disincentives for contributing, and also disincentives to actually find formal employment and to become a salaried worker. We know that over 40% of the population currently working works as a self-employed worker. And there's a lot of variability in their contribution capacity. We know that almost 40% of self-employed workers could be contributing, given that they are earning about 5 times minimum wage. There are some workers who are contributing below the minimum salary for contributions, and that leads to replacement rates that are low and also low pension adequacy when someone files for a pension. Just as I wrap up, wanted to mention some of the different options being discussed as part of this conversation on reforms. Where there is consensus is that changes are needed 20 years later. In terms of the recommendations and proposals, they are very diverse. There is a strong opposition to the different ideas being put on the table. And also, there's a lot of confusion around early retirement and funds. That being said, if we try to find the specific direction this should all move in over the next few years, we believe that there can be the kind of implementation that takes in all employees. It can be done in different ways. There could be a contributory plan that allows for somebody to be included based on their contributions and not their employment status. There could be more voluntary opportunities that could phase someone in. There should also be the contributory and non-contributory plans that look at a number of different options. The labor market should also be brought into the thinking for how to address the gap stemming from the social security system and labor market realities. Also, looking at the benefits package that contributors receive, that can also be reviewed. There's an opportunity for building capacity in this system for pension payouts to also make sure that the parameters take into account longevity. This is something that I know some of the presenters here have worked a lot on. There is also work that needs to be done on just raising awareness and having more people value the system. There's also a need for work for improving policy implementation. Going forward, the country does face major challenges, but one of the advantages is that, uh, according to the latest estimates, the country is expecting to see double-digit growth. This can have a number of positive implications for developing talent and changes in the labor environment in order to also enhance conditions. And we all know that part of what could lead to an improvement in how the social security system works has to do with favorable labor conditions. We know that there is a demographic bond offered by the country, and this is a good news. There also needs to be continued reflection on a number of these items to find the best way forward. But I just wanted to share that here are a few publications that you can read through and get additional information. But with that, I close and thank you very much, Diego. Well, thank you very much, Vicky. This was great. It is always a pleasure to have you with us. Let's now move on to our next panelist, Kirsta Sacker, who is the CEO of ADAP, the Dominican Association for Pensions. She's an economist and a specialist in Social Security for pensions and banking supervision. She has worked for the National Dominican Congress that worked on the reform that led to this law that we're discussing now. This is Law 8701 on Social Security. She was also the first pension consultant for the National Social Security Council in 2001. She has also been a consultant for the Inter-American Development Bank and specialized in social security and social safety nets. She started working with ADAPT in 2002 and since 2007 has been the executive director. She has a great deal of experience internationally and has addressed a number of different challenges having to do with fully funded plans and how to improve the different schemes and the layout. She has conducted international seminars. She has also worked in Europe and has a lot of expertise as the executive director of ADAP, which makes her someone who fully masters not only, of course, the pension system in the Dominican Republic, but also social security systems in general and the specific pension models in particular. Kirsis, thank you very much for being with us. Yeah. I know that prior to starting the day, we heard from the director that you're having a beautiful morning in the Dominican Republic. Madrid is not quite where you are in terms of weather, but thank you for joining us. Just to remind you that you have 12 minutes, and 2 minutes before the end of your time, I'm going to come on the screen, and that should be a signal that your time is about to be up. Well, thank you, Diego. Thank you very much. And I would like to thank all of the organizers for having me on behalf of the Association ADAP. I believe that Maria Victoria covered a great deal of what we had planned to prepare now. Obviously, it is also important to just come back to a few specific issues. As it was mentioned, up until the year 2000, there had not been a true social security system. And that is because with the Social Security Institute in the Dominican Republic, there was a similar system to what was created in most of the countries in the region that dates back to mid-century, last century. There was the creation of that institute, IDSS, but the coverage was more limited. I should say that coverage was only at about 15% for anyone working in the private sector. And there was a coverage cap. And then for workers who earned above that ceiling, not only lost their coverage, but they also lost their benefits and lost any contributions they had made prior to reaching that salary grade. And so that was a very limited system. Now, in terms of the different pensions that were provided, there was about 42% of per capita GDP was contributed to the pensions, which is about 600 pesos, or about just below $100 a month. And so we see that that was very low. Now, in terms of the actual law protecting government employees, most of them, given their jobs and their employment status, they would not necessarily hit the 20-year minimum. That means that they would lose out on all of their contributions and had no guarantees around their rights to these benefits. And the pensions were just slightly above IDSS, but were still at around $115, $120 per month, which in pesos is about 2,500. And that was yet again fairly limited. And within this system, there wasn't really an opportunity to improve how much you were getting in pensions, even through savings. There were special pensions that could be acquired on the side, but that would lead to a lot of inequality. And I should say that is still a pending item for us. We do believe that benefits need to be more equitable. We have the pension reform in 2001. I won't go into too many details here, but we established a system for funded and individual savings. We had the contributors, the subsidized, or rather the contributory system, the subsidized contributory system, and the subsidized system. These were the three pillars that were retained. There is a specialized regulator. This is the superintendent for pensions that regulates in these plans. This does lead me to say that we are one of the countries with the lowest contribution rates We're at 8.4 right now. However, the initial contribution rate was the equivalent of 5.5% of the contributory salary per month. And that has been going up. But as of March, we reached that higher number. This was thanks to the new law, but of course, after that, there was COVID and it hit us as it has hit everyone around the globe. In terms of the contributions, the way that it is broken down now is 30% coming from employees and 70% from employers. That is something that also makes the Dominican Republic stand in a different category, seeing as employers significantly contribute in addition to what employees contribute. As it was already mentioned, we know that that ROI has been great for the AFPs, given what we have been able to get in returns from those investments. The subsidized plan under the law has not been implemented. This is what would also have the government contributing to these pension funds, so that has yet to be implemented as well. We will talk about what the AFP has been planning to do in order to increase coverage, and that is meant to include not only the formal workers, but also self-employed workers in order to eventually also reach informal workers. The system has had a considerable impact, particularly in terms of savings. As we already heard, on average, 22% of the growth we've seen in the Dominican Republic, and that is one of the economies in the region with the best growth when it comes to economic performance. Over 20% of that comes from the individual savings, and that has also helped increase liquidity in the financial system. It has improved credit and also has made financing and financial inclusion for individuals more affordable. And that also goes for companies. This has also practically created securities market. Before the pension funds was founded, there was a law for creating a securities exchange, but in practice, it had been more difficult to achieve. There was no credit rating agency, and thanks to the creation of the pension fund and system, these other components have been implemented as well. Yesterday, we heard the governor of the central bank talk about how the economy has been getting stronger and what the projections are. We've seen the projection for the Dominican Republic and how good the future looks. Of course, all of this is based on the existence of this system in the Dominican Republic. This is something that we want to continue to bolster, not only to achieve these positive externalities, but also to ensure that we can provide adequate pensions to all of our members and contributors. I will skip this graph here in terms of coverage, and we'll look at the informal market we have. Currently, if we compare the number of contributors in the last study that we presented in September 2021, we are talking about approximately 75% of the labor force. This is a lot of work that we have to do to ensure that more people are covered. Now, let's talk performance and outcome for this pension system in the Dominican Republic. We have a total amount of assets of over 740 million pesos, or rather billion pesos, I should say. This year, it's been almost $13 billion. Over 50% of that has actually had a return, as we mentioned before. And this return, at the last time we looked at it, was at about 12.29%. And in terms of benefits, in other words, how many individuals have already benefited from the system as established by the law, we have over 266,000 individuals who have benefited from that. We have all kinds of beneficiaries from this. We have those who have retired early. We have those who are retiring after meeting the full retirement age, and also have a specific situation where, unlike traditional systems where people who start contributing later don't get the same coverage, under the current law, there is an option for getting your full pension even if you started contributing later. Now, let's move to where we are now. There is a law, as we mentioned before, that had a great design, but the implementation has yet to reach the degree that fully provide protection. I should mention that the subsidized contributory plan has not been developed. There has not been implementation of the bond as either. As I mentioned before, for those who are going to be retiring, should receive a pension that has part of it being the bond and the other coming from that pension fund. But there are other activities that haven't been fully carried out, like that pension literacy and other activities to raise awareness. We do have the average wages for contributors is between 1 and 2.5 times the minimum wage, and also have over 40% of all contributors who are reporting wages below the minimum wage. We know that we do need to work on addressing these different failures, but given the pandemic, there are major challenges. That being said, in the Dominican Republic, even though there is the idea being discussed for early retirement, the different authorities and the main officials from both the employers groups and the employee unions have all been talking about how to better preserve savings for workers, and the government in the previous administration and in this administration also came out to help employees and businesses in order to help folks who had lost income because of the pandemic.
So we need to protect these savings that guarantee the pensions. We know at AFPE that the reform has been positive. We've made a lot of progress, but we still have a lot of challenges ahead of us. And what we need is not a reform of the system. We need to strengthen and perfect the individual capitalization system we already have, because it is a sustainable system with a high impact on savings. It's fair. It does not generate a burden for future generations. It can be monitored in real time. The projection for the pensions can be done, and it is a democratization of savings. It eliminates inequities in privilege type pensions, and we need to focus on how we need to target our welfare and aid programs. I'm almost done in one moment, but we have a proposal in terms of the pension fund managers. It needs to be sustainable, equitable, inclusive, and include solidarity. We have made 25 proposals. 6 require reforming the law. 11 of them simply involve improving regulations or working with the authorities. And then we have others of another type of impact. In terms of modifying the law, since we have very limited time, we won't go into detail, but we want to guarantee contributory minimum pensions. The law establishes that we will have a contribution of after 25 years. We propose that we reduce that to 15 years and that we complement that pension through the Solidarity Fund. And studies that we've done tell us that financially it can be done, but also we can make improvements if we increase the upper limit of contributions for pensions, or we make some adjustments there. But ADAPT's main proposal is that the requirement to provide a guarantee for a minimum contributory pension that be reduced to 15 years. The other proposal is that we implement that guarantee for a basic solidarity pension. That would be 60% of the minimum salary that is subject to contributions. And this can be done according to studies by the public sector. These would be pensions funded by the state, of course, according to SIUBE and the categorization of what population this is target to. It would be about 3.5 billion, a little bit more than that, and that would include people with a much lower socioeconomic level under the poverty line. And another proposal, and I'll close with this, although there's still a lot of information and we'll provide the presentation. We want a pension, lifelong disability pension. Our law now includes, starting at a specific age, the pension receivers, but it should be guaranteed in terms of the balance of the account. If the person cannot work, they should have a lifelong pension that's guaranteed. And according to actuarial studies that have been done, this would require an adjustment in the price of the policy, of the premium. Thank you very much for being with us. In closing, I'd like to say that the Dominican pension system, with the advances we've achieved, we believe that we can improve it, make it more sustainable, so we can provide more and better pensions for all our workers. Thank you. Thank you very much, Kirsis. I'm sorry about the limited time you had, but I think you have conveyed a very accurate idea of how your pension system is working. And now we'll talk to the person who is responsible for regulating pensions in the Dominican Republic, Mr. Ramon Contreras, Superintendent of Pensions for the Dominican Republic. Since 2014, he has a degree in economics from the Santo Domingo Autonomous University, and he has studied at York, the University of York, on the International Program for Pension and Security Supervisors, and he's participated in seminars held by various superintendencies. He's accustomed to participating in international and national fora about the insurance market, pension funds, with the Association of Insurance Supervisors of Latin America as well, because he has also held positions in the insurance market before he became pension superintendent. He was insurance intendant in the Dominican Republic. As with the other panelists, we want to thank you for being with us today. You also have 12 minutes to introduce your topic, and we are very eager to hear your presentation. Thank you very much. Thank you. Good morning, everyone. And I have to say that as the sun has continued to rise, it has become an even more magnificent day here in the Dominican Republic. Thank you for the invitation to the 9th edition of the Global Pensions Program. We're also thankful that the Dominican Republic, 20 years after Law 8701, has been considered as one of the topics of the day. I want to thank David for presenting this book that you've been working on that tells the story of this 20-year journey. And I want to congratulate Maria Victoria and Kirsis on their presentations. And these presentations are aligned with the information we have, since we're dealing with the same issues and topics. So we're going to take a look at some of the background we have here and how we can assess the results of the structural reform of the pension system in the Dominican Republic. And for that purpose, we want to take a look at what we had before Law 8702. We had a mandatory scheme created by a law from 1948 by the Dominican Social Security Institute, which no longer exists, for the private sector, and it excluded those who had salaries above an established minimum. We also had the Fund for Retirements and Pensions of the Dominican State. This is by Law 369 of 1981, which covered public officials and employees. And then we also had a welfare system or a retirement system for police officers and others, and other complementary systems that were smaller and created by special laws or businesses as a side benefit for their employees. When we look at the various indicators of the system that we had current until 2000, which was a pay-as-you-go system before the reform, we see that these systems were characterized by having a low level of coverage. Only 30.9% of our labor force in the formal sector was covered by these schemes that I was describing earlier. And also, there was a problem of long-term unsustainability due to the accumulation of unfunded liabilities that, according to the World Bank, had gone up to 55.1% of GDP. Now, 20 years after the individual capitalization system has been instituted, we see that the system which had a deficit was excluding, had low coverage. Now we are aspiring to universal coverage, better coverage with solidarity and the individual capitalization possible. And we see an increase of our number of members, an increase of fivefold the number we had at the beginning of the system in 2003. By October 7th of this current year, 1.9 million workers made contributions to their pension funds. That's equivalent to 82% of the total of workers in the formal economy by September of 2021, according to labor market statistics by the central bank. We see that the fund is now worth $12.5 billion, which represents 20% of our GDP by December of 2020. This amount of savings, according to the study conducted by Diego and David, tells us that pension funds have been responsible for a 1.16 annual percent increase, or percent annual increase in growth. This means 22% of the total growth of GDP in the Dominican Republic since the system was set up. And this has also facilitated a reduction in interest rates, as Kirsis was saying, 3.15% reduction. And this has contributed to reducing poverty levels from 371,000 people who have been able to overcome this level of poverty. In spite of these achievements and impacts generated by our pension system, we need to make sure it continues to move forward and make progress until we achieve the goals established by the law 8701, which, as has been mentioned, the structure is good, but it has not fully been implemented. And then we can overcome the main challenges that are still pending in our system. The first one of these is making sure informal and self-employed workers can join. According to Law 8701, self-employed workers with a stable salary that is equal to or less than the minimum salary will be a part of the subsidized scheme. It's funded directly by the worker and by the Dominican state in inverse proportion to the level of income of the worker. This is a model that to date has not been implemented in the country due to various different factors. I'll tell you about some of them now. First of all, the Dominican labor market is characterized by high levels of informality and unemployment, high mobility in the from the formal sector to the informal sector and vice versa, and a lot of temporary or gig work, among others. So the level of informality in the Dominican Republic, according to studies conducted by the central bank, is above 50% of the economically active population. But there's also a difficulty in precisely calculating the average income of this group of workers, according to recent studies by our institution using the data from the central bank's poll or survey. They calculate that it's about 1.9 million workers that we're talking about, with a monthly average income of $320, which would be the equivalent of 1.6 times the national minimum salary. And using these estimates as a basis, the subsidized contributory scheme, where the state takes on 70% of the contributions, would mean an average outlay of $90 million every year. Similarly, we would need to define a membership scheme and a contribution scheme that is aligned with the labor dynamics we have and that will generate incentives so that this sector will become interested in becoming members of the system, since, as we've seen in various studies, self-employed workers are often not motivated to sacrifice their present consumption. Currently, from the central government, we've been studying the operational and financial feasibility of implementing a scheme of this kind, but to date, we have not had final results. And this means that we have an important decision to make in terms of public policy. Of course, there are other challenges as well that the Dominican pension system must deal with in order to be able to fulfill the expectations we had regarding the coming decumulation phase. For 18 years, we've made significant improvements to our pension system in terms of increasing coverage and benefits for pensioners. However, before I mention some proposals for improvement, we should highlight the alarming results we've seen in our labor market, which, along with other factors, have an impact on performance, but also on expectations regarding pensions in the decumulation phase. Currently, those salaries that are above or more than 75% of the workers are no more than $275 per month. And this, with a low contribution density, means that several studies tell us that the replacement ratio in some cases is at levels below 40%. And this is why this is the best time to conduct a deep analysis of our system, with the goal to increase projected replacement ratio so that we can achieve true social protection. For this purpose, we need to design improvement proposals for those variables that can have an effect on this ratio: contributions, retirement age, new types of retirement products, etc. Another way to make improvements would be to seek a short-term sustainable solution for the inclusion of independent or self-employed workers, to add health coverage, eliminate inclusions in the disability and survivorship pensions, such as the fact that there's a prescription date for pensions, make them imprescriptible. After 18 years of experience with the new system, we really should analyze the financial and technical feasibility of the creation of a solidarity pillar that would cover the entire working population, along with the best practices and examples of those countries that have implemented similar strategies for the protection of their populations in their old age. In this way, in our humble opinion, we could target a universalization of our pension systems. Thank you very much for this opportunity to speak with you.